Hi, welcome to the Market Alert for Wednesday, 4th of May 2022. So bonds bid, stock skid ahead of Fed as US natural gas soars to 2008 highs, and that's at the end of winter as well. Bond buyers emerge as Tina dies. FOMC, more room for hawkish than dovish surprises, widening the scope for 75 basis point hikes at future or faster QT. Our main hawkish risks. It's all about the Fed today. And previewing the Fed's decision to kick off a record tightening cycle right into a recession. Yeah, it's staggering, isn't it? They could have done this years ago, but now they've waited until inflation's caught up with them, and now they've got no other choice. They're painted into a corner. Worst start to a year for stocks in decades. Consumer savings down to the bone. GDP negative, and the Fed is going to kick off a record tightening cycle. It's all a show, absolutely. Get your popcorn ready is what I say. The unthinkable resides in the notion that the tightening cycle is already done in spirit, and that the Fed's coming actions are simply playing catch up to what the market has already done. It's going to be interesting, and that's tonight. We've got a projection of 50 basis points for the interest rate increase this evening, as the Fed makes their statement at 7 p.m. and 7:30. Powell will be justifying whatever decision he takes in this area here. It could be a surprise. It could be 0.75%. Who knows? And also today, ADP ahead of the non-farm payroll numbers on Friday as well. So we've got quite a bit this week to bring some volatility back to the markets, because it's been fairly quiet. Gold-silver ratio for yesterday, you can see, was back up again, stuck in a sideways range at the moment. Again, all the markets are waiting for the Fed. And I'll just show you this on Tuesday, wasn't it? It was yesterday. Let me just find the chart. It's in here somewhere. It's always the last one, isn't it, you go to? If we have a look at the 30-minute chart in the DAX for Tuesday, this big spike. Thanks, Chris, for letting me know what it is. And it was this trader made error in flash crash, Citigroup says. Now, I'd like to know the answer to this question. Given that on MT4, a bog standard platform that we can use as retail traders, they have, program protection within these systems. So if you don't have sufficient funds in the account, you can't actually trade. So how can somebody in the city put in a massive order and they've got no way of actually double checking this? With today's technology and high frequency trading, nanosecond trades, the fat finger thing doesn't wash with me, I'm afraid. It may have been they've had a massive sell order. The market was quiet. Bank holiday managed just to, slip in a few trades and then bring it back and then blame a fat finger, etc. So anyway, that's what was behind this on Monday, the 2nd of May. That was what that 100-point bar was. Anyway, let's get on and have a look at the markets. Like I say, they're fairly quiet because obviously the market's waiting for Powell this evening. So yesterday you can see a narrow range to the Monday for the Dow, slightly weaker overnight. I can't forecast what's going to happen because we don't know what percentage he's going to raise. If he goes for 3/4, the market will tank. If he goes for 1/4, it will rally. I suppose that's about it. But at 50 basis points, could go either way. So here we are facing a situation where the market's sideways. These are the downside targets for the Dow. And in the event that we get a rally off the news tonight, these are the upside targets as well. How volatile the market will be during the normal hours up to this, who knows? But I would imagine it's going to be fairly quiet myself as the market waits for it. And if you look at yesterday's 30-minute in the Dow, still a big range for this, but it was fairly sideways after that initial move there of 400 points, which is quite low, to be honest with you, these days for the Dow. And you can see overnight the market's just sitting on the DP there. So very quiet range at the moment. You might get a bit in the first hour this morning, but then you're going to see the market coil. Well, that used to be the pattern, but you never know these days, do you? In the DAX daily, similar thing. The market quiet there for yesterday. after the market absorbed the selling on Monday, Tuesday the market sideways to higher, above the 5-bar moving average, but trapped between that and the 20 at the moment. Again, on the downside, let me just redo this. We use this short-term one here. You've got this here for short-term pullbacks to Monday's low, and then on the upside we've got the high to this low, and we've got these here as well. So you can see we're sort of banded at the moment within fibs and within the price range as well. In the 30-minute chart for the German DAX for yesterday, again you can see how quiet this was. Blue line here to this blue line is only 100 points. That's a quiet range in the DAX. Used to be an average and a good day, but at the moment that's quite a quiet day there. So you can see the market just bouncing off these pivot points and previous day's highs and close, etc. In the 5-minute chart, just a bit of detail for yesterday. The market moved lower and then found support, straight reversal, came back 70 points immediately, then traded up, and then once we became overbought with divergence, there's your divergence off the high there, turning red, the market came down. We've got divergence on the upside there, get a small bounce back to the 50-bar moving average, become overbought with a crossover in stochastics, red bars start to appear, market goes down, divergence, demand, crossover, bars start to turn green at the previous day's close, market starts to move back and then gets into a bit of a range as we go into lunchtime. Dow opens, the pre-market Dow slightly weaker. We then see a lot of volume coming in there. Again, we've got divergence. The market's gone lower here, and then the momentum is coming back, and then we start to make our way back with a few choppy retracements, and eventually break out until we become overbought once more. In the currencies, we've got the GBP JPY, that's looking sideways and weak. Again, all of the currencies are waiting for the Fed, obviously, because they want to see what the dollar's going to do. If the dollar's up, everything else will be down. So again, this is how it's becoming a bit of a coiled market as well after the recent activity to the upside, which has been nice with a couple of pullbacks. Now just waiting for the Fed. It's been on the cards for a while, hasn't it? And they've been just talking about it. So like I say, D-Day has arrived. Will they tighten or won't they, and how much? Anyway, the GBP moved higher, then it sold off, became oversold, then went back, and then it just got stuck in a range, which you can see there. The pound continues to become under enormous pressure. Tomorrow we will see the UK interest rate rise as well. If I recall, this is on the cards for tomorrow. Let's have a look. Thursday, BOE, Bank of England, official bank rate for GB. There we go. So from 0.75% to 1% tomorrow for the pound is forecast as well. So that should give it a bit of a reprieve. You should see that move up tomorrow. But of course, overnight with the US raising rates, we are likely to see the dollar move higher. So let's start off with the dollar. We'll start off with the daily chart. There you can see the dollar index 103.905 is got to be taken out. I was just thinking about something else, then got distracted. So we're above the 5-bar moving average, and we need to take this out. And if we go to the monthly chart, you'll see that we're still tying in with this triple top resistance, and there it is there. So that new high the other day was in the last month, and the last month is complete for April. We're now starting May in the monthly chart. So we need to get through this area of resistance. Let me just have a look at the high of this one. Yeah, slightly lower, 103.80. So yeah, we're already through this anyway. Meanwhile, in the metals, silver continuing to move lower. It's going to get crushed later. 21.97 is that area. This is a very important area. Because if the dollar goes up, they're going to move the metals to the downside without a doubt. So they may do that beforehand. It's already starting to look weak, isn't it? If we have a look at the 30-minute chart, they've already just broken the 22.50. So 22.50 50 cents, it'll be no problem at all. So don't be surprised if you continue to see silver being moved lower during the whole of today's session until this evening. They'll do it one way or the other. They'll either take it lower to begin with to bring it back, or they will do it the other way, hold it and then crush it. But one way or the other, it's going to get crushed. And the same for gold as well. As I said with the gold-silver ratio last week, for me, this is going way back up to the highs in this where we saw in 2020. There you go, you can see the next upside target in this is going to be, let's have a look, 85 gold-silver ratio. We're not that far off it. And then we've got a few more here as well. So we've got this level here, which is, let's say, 100. Just for argument's sake, so 100 on there. We should send it down to around $20, $19. If they can do that, just depends, doesn't it? As the inflation thing continues, and the metals will have the day, but at the moment, when you've got the dollar moving up like this, and this could head up to 120, we saw in the other chart. I can't show you in this. I don't have the 120 in this chart because ETX don't have all of the data. I don't think anyway. Let's have a look. No, that's as much as I've got. So yeah, even going back to April 2003, there is where we've got this 103 area. So you can see we've made some huge progress in the dollar to the upside. Like I say, going back to gold, yeah, expect this to go through the 89, head towards the 200 MA as well. And then finally, to finish off with crude oil, this is starting to move back to the upside as well. And there's something very interesting news around, which I spoke about a couple of weeks ago, about a shortage of diesel coming. Great article in Zero Hedge about this. Okay, that's it for this one. Let's wait and see what the Fed does this evening. It will be very interesting to see whether they actually go with 50, 75 or 25 and what the market's reaction is going to be. But all will be revealed at 7 p.m. As ever, thanks for watching. See you in the next.